Why don't we kick things off with Snap? A couple big news items coming out over the past few weeks. Thought it might make sense to recap on those before the company reports next week. We had a research note earlier this month from a MoffettNathanson analyst expressing some concerns about the company's cash burn. This came as CEO Evan Spiegel is reportedly targeting full-year profitability in 2019 and a stretch goal of breaking even in Q4 of 2018. I have a little bit of skepticism around that, Evan.
Yeah, I don't think they deserve a lot of trust when it comes to their outlook and their forecast, because they've shown time and again that they're just not executing well and growing this ad business. MoffettNathanson is not the only analyst to express concerns. I mean, BTIG, like a month prior, had a similar note. They downgraded Snap to sell and also pointed to this cash burn that's really troubling. I mean, they've burned through $500 million in the first half of the year, and right now, or as of the end of the second quarter, they had about $1.5 billion in cash. So, and their cash flow is just horrendous. I mean, free cash flow is typically in this negative 200 million range almost every quarter. So it's just, they're just on this really unsustainable path.
Yeah, and I think the narrative that the company is spinning is we have this new CFO. He's a little bit more financially minded, more of a kind of traditional Wall Street exec. And we're starting to see them become a little bit more shipshape, right? We're getting some guidance from them. But I don't know that you can immediately reverse a company's path in 1 or 2 quarters. You know, to your point earlier about cash flow, I mean, they're also posting operating losses of over $300 million every quarter for the past year. That's an operational issue. That's not necessarily a financial issue.
Right. And then on top of that, they announced that they're expanding their Snap Originals, which is these original content shows. But now they're kind of getting into the scripted shows and docuseries. And they've done these kind of things in the past, these little bit of original content here or there. So, but this is kind of, sounds like a pretty big expansion. So these are basically just short little series that you can watch on your phone. They're vertical format. You know, each episode's only maybe 5 minutes. Then, of course, advertisers can purchase these ad spots that are 6 seconds. You can't skip them. So I don't know about that strategy either. Monetizing original content with ads original content typically is very expensive. So monetizing with advertising is just a really tough way to make money. Of course, these are short shows, so maybe the production costs aren't too big. But it just seems like kind of a weird thing for Snapchat to be trying to pull, because is that really going to bolster engagement? I mean, their user numbers are already kind of heading in the wrong direction, and I doubt that this is going to work.
Yeah, in some ways, it's surprising for a company like this to get into originals. You know, you think of original content as being something that platform companies need in order to draw people in and have their model scale, right? Like, you own and operate this content, so you enjoy the leverage that comes from it. You know, you look at a Spotify or a Netflix, it's a little bit different when you're licensing other people's work or paying royalties on other people's work for usage. So in some ways, you know, you have all this user-generated stuff on Snapchat, and they don't need to necessarily pay for content. But then you can also make the argument, okay, this original series, well, this gives them something that Facebook can't just copy, right? They can't just port that immediately over to Instagram because it is a Snapchat original. They own it.
Right. I mean, then again, also keep in mind that Facebook is also kind of seeding some original content for its watch platform as well. So everyone is trying to do original content in their own kind of way. But certainly Facebook has quite a bit more money than Snapchat does.
And the reason why this works into this financial conversation we're having about profitability, right, is you look at the books for Snap, and infrastructure costs eat up about half of revenue. And as we've talked about before, that's a variable cost because they do not own all of their IT infrastructure. So that's going to scale pretty much with usage on the platform. The other big expenses for them, I mean, it's payroll and R&D. And so if you see them laying off a bunch of people, there'll be some cost savings there. Or if you see them stop investing in AR, VR, maybe originals, then the cost structure might change a little bit, but clearly they're still investing in new stuff and they're investing in new content. So I see all of this at being kind of at odds against long-term profitability.
Right. I think that's kind of the real crux of it here, is that they just do all this weird stuff that's like kind of arguably a distraction. I mean, spectacles is a good example too. I mean, they're spending all this money developing spectacles. No one uses them. No one buys them. Now they're putting money into these originals, which of course everyone's doing it, so it kind of makes some sense at face value. But again, it's kind of unclear if it's actually going to bolster engagement, strengthen the platform at all. And of course, comes back to the money. I mean, is it going to help them grow ad revenue? We'll see.
We'll see. Yeah, because that's where it's going to have to come from, right? I mean, for them to reach profitability, they're going to need really strong top line growth that outstrips all of the variable costs that move with increased usage, which basically means they need to increase ad impressions or increase the price that people are paying for ads. And I don't really know that that's going to happen. I mean, all the revenue growth that they've been posting has been because they've increased impressions. Prices have fallen precipitously since they moved over to the automated ad serving platform. And I don't really see that ending anytime soon.
And meanwhile, they're running out of cash.
So something to keep in mind as you look at Snap's financials next week when the company reports. And just as an interesting little anecdotal thing, one of the things that we've had kind of a struggle with Snap is like they don't have the same targeting, right, that a Facebook does, that a Google does with intent and with kind of social activity and demographics. I was on Snap this morning, Evan, and I was kicking the tires of the platform, as I often do before we talk about the company. And I was checking out some stuff in the Discovery channel, and I was served 4 variants of the same ad while consuming content. They were all from Merck, and they were all for birth control. and
are you not in the market for birth control?
I am not
saying
presently.
Their targeting is not working?
I'm not presently in the market for birth control. And I view that as just a targeting problem on this platform. And one of the issues that ultimately traces back to ad prices, right? Because if that's what I'm getting served up, there's clearly some issue there, and that's going to bear out in whatever the advertisers see in terms of ROI. For reasons like that, I don't really see the ad prices turning around anytime soon. I don't see this company becoming profitable anytime soon either.
Yeah, I just regret getting out of my short too early.